And now this could possibly work. I've been messing around a lot with that to fix that sound issue, right? So slowly but surely, I am getting there. And let's try this out. All right. And this doesn't work well. And OBS. And now it doesn't want anything to do with my camera. So let's actually do that. There we go. Seems to be working for now. We'll see how it develops as we go. How we doing, guys? Everyone have a good day? Talk to me here. I'm doing great as always, Justin. You know, these days are hard for me because I have to be a little risk. I have to wait for the markets to do something. But I mean, I have to get used to it, right? Not a money day, but good, son. Tough day, to be honest. Yeah, honestly, it was the same for me. And I mean, we'll look at it, right? And we'll analyze everything we want, well, everything we can, right? But the truth is just days like this are extremely rough. I'm break even. By the way, I had one win, one loss. Decided to leave it at that. When we have a day where I see the price action is, well, sorry about that, guys. Not that the price action is good, but I can see that there is expansion, right? You can tell when it's consolidating. It's a high resistance day. If it's not that type of day, then sometimes I'll push myself and allow myself to go for 3, even 4 to 5 trades sometimes because I see the conditions are good. I've just been offside. So I allow myself a higher range of drawdown to on a day like this because I know these are the type of days that I can easily bring it back, right? But today was not that type of day. So right after 2 trades, I got out. I was in the like point 0.1 or point 0.2, minus point 0.1 or point 0.2 R. So not exactly a break-even day, but this is in the range where I call it break-even. We'll look at it. I wanted to keep the levels we discussed in the weekly outlook. I think it's a good thing. And I think I'm going to change my camera spot because when I'm looking here, I'm looking at Discord. For me, it's kind of like I'm looking at you guys, but then my camera is right there. I need to get used to this, right? And you guys will start noticing I really don't care about my physical appearance, so you'll see a lot of different hair days. I'm telling you guys in advance, all right? But that's the goal of the camera, putting a face behind this voice that's been talking with you guys, talking to you guys for a while. You hate looking at us? Rude. Fair enough. Fair enough. But look, we'll dive right into it. From a daily standpoint, as I said, I was using these levels. Of course, new week opening gap above was a big draw for me, but I didn't expect us to do this whole shit on Monday. And what do we know? After a large range day, we expect a small range retracement, right? So we had a large day to the upside, and I mean 400 handles. That's nothing, right? But you got to look at proportion. So based on recent candles, this is a larger one. So it is a large range day, right? And I also like to implement ADR, average daily ranges, which is not 426 handles on a Monday. So I like to look at this is just another example of me using the data directly from Rice Statistics, right? I like to look at the daily range, and when we are overextended, which means that we are over set daily range by quite a large margin, I like to look for 0.1, 0.2% of price, right? Just in general. When we are over that, I know this is a large range day, and I expect the next day, going into the next day, to be more so of a consolidation day, not necessarily needing to be an inside day. And what does that mean? Well, it didn't touch previous candles high and didn't touch previous candles low. That's what is an inside candle is, and in this case, an inside day. I didn't expect it to go that far, but I definitely was looking to frame more shorts than longs, just due to the fact that we just expanded very aggressively higher. We need to retrace lower. So that was my bias at that specific time. Looking into early into this morning, I was looking to short price. Now let's go back here and actually look at what happened. And this is, in this case, it is previous day high. So you know what? I'll leave that level up here. as we can see, we had 10 a.m. news. I think that line is correct. Let's just see it. Yeah, 10 a.m. news right here. So we had 10 a.m. news. So what do? Well, I don't engage with the markets before 10 a.m. But now let's be honest, this was extremely, extremely beautiful. I was looking at this. I woke up early this morning. Just in case you guys are wondering, I like to wake up near 8:30, 8:45 because I'm a quick morning person. I don't have a huge routine, so I just like to get on my charts as soon as I can. But this morning I woke up more closer to 7:30. I was drinking this weekend, and when I drink in the weekend, I need to catch back up on the week, and that's just my mentality with things. In case you all were wondering, right? We talk a lot about psychology here. That's just my way of paying back my dues after I had a full weekend of doing nothing and just enjoying myself, right? But just to get into it, we had divergence at this level, right? We had SMT, then invalidated that SMT. That is a very big sign of reversal. You'll see this happen quite a bit. Markets are uncorrelated, as we can see by seeing the presence of SMT. And then you have a moment of convergence. So you have divergence and you have convergence, where all assets converge into one specific direction aggressively at a specific time. That's a concept I'm actually working on codifying. Is that a word? Coding, pretty much, is the word I'm looking for. And perhaps it will be something we have data about at some point, but clear sign of reversal is when you have a lot of divergence in the markets, especially, right, highs and lows, which basically means consolidation, and then you have a clear manipulation on all assets. So that was, first of all, a clear thing for me that was like, okay, well, this is a high probability of being a low of day. What did we do during the day? Well, we opened and started expanding lower. That gives me signs of manipulation. So at this point in time, I'm looking at short, right? I told you guys, I'm looking for a day that will retrace lower. But then we're primed for a long, power of 3 tells me to go long. So it's just one of those unclear days where, to be honest with you all, I have no clue what to do. Now I see a London framework forming, right? That tells me that, okay, well, here, intraday drawn liquidity tells me I'm going to go target London highs. And actually, yeah, okay, so these are London highs. Yeah, near midnight open, I remember this. So this was a clear objective as well. But then that objective got taken before the news, right at 9:30. So in this point in time, I'm going to be honest with you guys. I'm clueless, right? It is counter to my bias, so I can't trade shorts starting here, right? I can't really look for shorts because my daily power of 3 tells me we're going to retrace higher. And using data, right, statistical retracements to the daily open, especially with the news we had, this is all stuff I'm very more than happy to share with you guys. Just let me know if you guys want to see this, right? See more insights into my day-to-day use of statistics. But it was a very high probability of returning to the daily open. And in line with my power of 3, that made sense. Distribute higher. So in this case, my shorts would be shit. So low probability to short. And my long objectives basically already been met here. But then I could look to long to the daily open. So right before we had our news, definitely low probability of long, low probability of short. And then we had a high probability framework to go long. But even then, I would have expected us to reach previous day high and everything. And that just stopped at the daily open, new week opening gap. But if we look to the right here, what do we see? SMT, right? Yet that only came after the fact. So if we look at the correlation between these assets, we can definitely tell that there was a big lack of it, for lack of a better word, right? NASDAQ was very bearish. ES was very bullish. We're the day before CPI. There's nothing to say here. It was not going to be a high probability day. I said, I told you guys during the weekly outlook, I'm going to be trading it. I'm going to be very careful because I don't expect it to be a nice day. But there still could have been some opportunities. And that's what we're going to go look into. As I told you guys, I got basically a win and a loss, but my win was tiny. It wasn't really a win, right? It was what I like to refer to as a break even. When I make under 0.5 R on a trade, that's just a trade. That's like variance. That covers costs, and that's it, right? So I don't like to regard this as a win. So we'll go and look into it. As I said, London High was already previously taken, so the only thing I could look to frame was the daily open, which you'll see right here, daily open. And then, of course, right on top here, we had, let's just call it buy side. This is previous day's high. So this was a clear objective. I believe I saw, I don't know if he or she is here at the moment, no. But Mona Lisa, it's so weird to call that, but Mona Lisa was in chat looking for previous day high. I think we had a few people in there, right? And that's what I was looking for too, right? I had 10 a.m. news. We had a slight Judah swing lower. And at this point in time, I couldn't trust if this was a Judah swing higher or lower because we formed a range, right? With no fair value gap. That is important. Now, this is a news framework. And yes, I will do some in-depth posts about this very simple framework. If my news has specific characteristics, I look for a rate of both sides. And that is extremely high probability. Now, we didn't have a rate of the lows, but what did we have? SMT, right? And if we look to the left here with the same low right here, we even had SMT before, right? So let me actually duplicate that and let's go look at it. So we had SMT even beforehand. And so from that point on, I'm looking along. It's that simple, right? Why? Because I have manipulation at the lows, which is confirmed. Why? By the SMT. I have my news event. I know I can frame longs to my daily open, and that's what I'm going to be framing. That's simple. Now, to be completely straightforward, I don't see a good entry. And a lot of people might talk to me and say, well, look, there's a breaker block right before here. And let's actually draw it correctly. And right after the news right here, we dug back into a unicorn. Yeah, but I had no SMT. And sometimes you'll hear me telling you guys that's okay. Sometimes I won't. In this case, I was framing for the news rate specifically. So in this case, I needed to see SMT. You want the easiest rule, right? Because I'm all about rule-based approach and simplicity, right? And following a clear rule set. Well, okay, on a low probability day, for example, the day before CPI, this is all stuff that's been shared on Twitter, right? I have my whole news framework. I had a PDF for it. And anyone that asks me for the PDF, for example, someone opened a ticket about that recently, I send it to them. This is how I interact with news. And on the day where it is lower probability, I will require perfect setups. After the SMT was in a uni, we'll look at after. But after this point in time, for example, I'm not going to look to enter on this array because it's been invalidated, right? So I'm not going to enter here because my array got invalidated. But what am I going to require? Additional, well, basically a new unicorn, a new setup. And we'll look at it right here. So you had another range with the last bullish candle of that range being a breaker block. And as soon as we formed it right here, well, we retrace into a fair value gap. Now, is this a high probability setup? Rule-based? Yes. But now, where I would have looked to partial, like if I'm entering here, even if it is so close, like what is that, 25 handles, I would have looked to partial here. Because that's where it could actually reverse, right? So sweep this into this, that's a clear area to take a partial. So it is a good opportunity here, but how I would have managed that trade would have been a lot different than any random perfect trade, right? Why? Because I would have looked to take profit early. And if we look, we have one PD array, we have fair value gap, and then that's the invalidation of your breaker. I always regard this as my maximum stop loss. If the 3 PD array would give me a better stop loss, then I would put it. But in this case, it would be that swing point because that is the invalidation of the breaker that I'm utilizing, right? You have your first swing point and your second swing point, which forms your breaker range. And then you have the manipulation of that range. And once we formed the breaker block here, if we trade below this, that is no longer a breaker block, right? That is my whole understanding of breaker blocks. So that's my final invalidation points. But let's say you didn't count that and you want to see the actual 3 PD array stop loss rule. Well, you have another order block right here, which would place your stop, what is that, 3 handles below it. But I like to tell you how I personally engage with it. Yeah, it's actually exactly 3 handles. No, 2.75 handles below. Now, where do I look to take profit? Well, of course, daily open is where I want to. Now, is 1.27R enough for me to take profit? No, that's the truth. I need more. And recently it seems like we're discussing that quite a bit. And it is unfortunate, but with current market conditions, to be expected. But what do I do when it doesn't offer me enough return? I just go break even. So when my take profit, well, when my level that should be my take profit is hit, but it doesn't offer me enough risk to reward, I'll go break even instead. So yes, I'm not taking money out, but I'm going break even, which is taking away risk from my position. So let's say I was risking $1,000, which I don't, by the way. I'm risking currently $500 per trade. But let's say let's just talk real numbers for me, at least. I was risking $500 here. Now, all of a sudden, once this level gets hit, I'm risking 0. And I'm covering costs. When I say break even, I like to go a few points above it, but it also depends, right? In this case, I don't want to see it trade back down here. So I'm very happy with placing it a point or two, right? So 1 handle above my actual entry, just so it can cover my commissions that I paid for this trade, which, as you guys probably know, for $500 is pennies. Really, it really isn't much. It's $1 or $2, I believe. But I still have take profits, right? So now where am I going to look to take profit? Well, first obvious outcome is this cluster of standard deviations. Why? Because that's my 2R. It's actually funny that it is exactly 2R at that 2 standard deviation level with that unicorn entry. That's actually awesome, to be honest. But looking at this, that's a very clear, easy take profit level. So I went break even here, took profit here, and then you could have held on. Personally, didn't work out too well for me because I got stopped out here. And I was a slightly late on that entry here, and I took profit somewhere around here. Basically, not a very good, well-managed trade for me. That just ended up getting me broken even, pretty much. I saw someone take the exact same trade actually. Very nice trader, very good trader, Bray, if you guys are familiar with him. But I saw him take the same trade and get broken even at the same place as me after watching price just consolidate. So was there a setup? Yes. Was it the best setup? No. Did it still allow you the opportunity to make money with simple mechanical rules? Yes. Well, I shouldn't use the word simple, because it's simple is not what we do. Trading is not simple, but it is it predefined, clear rules? Yes. And then, of course, you had that full death blow by NASDAQ returning all the way back down almost to New York Open, which did give some opportunity for shorts. But as I said, I couldn't frame shorts here because I was framing this is low of day. I could frame some retracements. We'll look at it. Personally, I didn't today, so I kind of feel wrong talking to you guys about how you could have traded that short because I didn't look for it, right? After the SMT, for data low, we had SMT there. We took out data low, right? ES had taken out that low, so it's not interesting to me to see us return to that level specifically, right? Later in the future, will that level still hold liquidity? Sure, but it's not as important due to the fact that it has already been used by, right, SMT as we talked. But what you could frame is, as always, right, when we frame intraday retracement, we look at the 15-minute range, right? That's our intraday time frame. And then we look at our first discount and efficiency. So I could look to short all the way to this level. That's it. As I told you guys, right, I did not. I personally did not trade that short. I wasn't even looking for a short. I was just pissed that my long didn't work out. And I actually tried to long again in here, and it was painful. Actually, not here. I tried a long somewhere here. I'm trying to find it actually. Well, here. There we go. Bullish breaker, bullish unicorn. Try to long this. It did not work out great for me, guys. Full stop loss very quickly from scaling in that position. It wasn't beautiful. But what can you say, right? You can't always be right. If you were looking to frame shorts after Daily open has been rebalanced. New day opening gap has been returned to, repriced to, whatever explanation you want. Or perhaps you were looking at late New York midnight open retracements, which are actually very high probability. Something I was testing out actually this weekend. Pretty fun stuff. If you want to definitely have a look at that, it is worth your time. But I'd be looking at frame short. Okay, I have my objective, which, where is it? It is right here. Let me actually mark that out as such. You know what? Let's remove my quarters. I'll put them back tomorrow. I'm tired of seeing them. But from this point on, you could look to frame shorts towards this retracement objective right here. And what would you do? Well, if I'm looking for shorts, I'm just waiting for a breaker to form. You don't have to think further than this. This is why I love breakers so much. I don't have to think. I just have to, well, it sounds bad, but react to price. The first bearish breaker block to form is right here. Now, was there one that formed here? Probably. Well, I mean, I see one right here, right? So there were possible losses involved, but even if you were just looking at short, you probably, well, let's actually look at it. So you had one loss. If you waited to trade after the news, of course, you would have had one loss, and then you would have had this setup here from this breaker block, right? Inversion fair value gap. That is the closest array because we did not form any bearish fair value gaps at this level. So your entry, we closed under right here, and your entry would be right on the next candle over. 3 array stop loss rule. Inversion fair value gap, you have order block, and then of course nothing else because that's the invalidation of your breaker. Just didn't form a lot of arrays here. Well, actually you have another inversion fair value gap right here. So your stop loss, well, it would still be here, but you have your 3 PD arrays, right? You have inversion fair value gap, inversion fair value gap, and order block. And as I always say, I'm not going to put it on the order block. I'm going to put it here, and you'd be surprised as to how often, you guys know actually from these PA reviews, how often do we trade back into that order block and then trade to fully go to that order block, but we're going to respect that swing point. Happens extremely often. All the rules I'm telling you guys are based on actual data, not bullshit or, oh, here are my beautiful rules, trade my 100% win rate model. All right, sorry, I'm getting salty. But all that to say, decently wide stop, but with your target objective, does this provide enough return for my trade? Yes, 2.91. Would I look to partial before then? 100%. This is my final objective. Where would be a good partial? Well, looking at this, I could look at my 5-minute range, right? And look for, once again, first discount and efficiency. Because it doesn't have to go all the way down here, which is my intraday range, right? I could use my shorter term range in a 5-minute chart and look for my first discount and efficiency, which in this case would be this order block, right here. I don't want to draw more things, but this order block, which aligns very beautifully with midnight open. So that's just a way I could target midnight open as a TP1 in case it wants to reverse there. Gives me above 2R, and then look to take my final objective at this level. Why would the entry be on that candle and not as soon as we get into that inversion fair value gap? Well, let me show you. Oh, an inversion fair value gap occurs when we close basically opposite to a fair value gap. So if I have a bullish fair value gap right here, when do I know that it's invalidated? Oh, this is a great opportunity to test out TradingView's new thing. So little cursor, why is there? Okay, I didn't know there was a cross there, but you can is it Alt? Yeah, you can draw temporarily. Actually, I hate it already. Okay, that didn't last long. But as I was saying, when is this fair value gap invalidated? Well, when we close opposite of it. So we can trade back into it. We can close past the midpoint of it, which is consequent encroachment, right? Seems like a word I haven't used in a while. But when is it invalidated? When is it no longer a bullish fair value gap? When we close below it. So on this candle, and I need to wait for this candle to end because look, how many candles do you see open low, 20 handles, and then it can fully reverse and it could close right here. So I need to wait for this candle to be over before saying that this is now a bearish inversion fair value gap, right? So it's basically a synonym to saying an invalidating bullish fair value gap. It's a bullish fair value gap that we invalidated. So now I expect price to use it in the opposite direction. And now there's a lot of ways you can use them. There's a lot of people that use them with multiple different models. I don't. I have a unicorn. I take my first array that is present there. And as you can see, that we traded back into it on the next candle over. Does that make sense, Nico? I need to wait for it to be inversed. So I need to wait for this candle to close before it is an inverse fair value gap. And so that's why the entry's on the other candle. Makes a lot of sense. Thanks. Pleasure. So see, for example, I have a bot who trades basically unicorns, right? And when it uses limit orders. So as soon as this candle closed below it, it would place a limit order right here. And that's what you can do as well. I've said it before. I like to mark it into my trades to make sure I'm in there. And even if I get slipped, I know how to manage my trades correctly. Well, clearly not today, but I have confidence in my abilities to manage my trades. And so I prefer to mark it. My one good trade today was that short, and I felt like I got lucky. Well, you know, sometimes it's like that, because sometimes you might expect like, oh, I'm just going to take a small short here and like, you know, it's only going to get there and I'm probably going to get broken even. But then you turn out having a fully successful trade and then it's surprising, right? But that occurs when you're not, well, not necessarily. It can occur when you're like not following your rules and stuff and not following a clear setup. But for traders that are more based on intuition, which is not a bad thing at all, by the way, guys, you really learn intuitively, especially when you're a specialist, especially when you're a specialist. Wow, that sounds great. But you're focused on only one or two assets or perhaps three, right? But very short list of assets. You tend to recognize what they do. And yes, you can just trade that. Yeah, exactly. 1050 to 11 tell the reversal macro, the macro that will spool against profitable AM traders. We already did that. So now you can see for continuation to that move lower, which could be a very nice opportunity to frame a retracement, right? And whether you framed it as a retracement or an objective, or an expansion, right? If you were bearish, and you thought that we were going to go all the way to the current day's low, well, what would have been your TP1? Right here. So you would still have made money, but I would have TP1 and closed my trade, while you would have TP1 and then gotten broken even. Well, actually, did we even reach that break even? Not even. So you would still be in that trade, or as I like to do, close at 4 p.m. So there's a lot of different ways to look at it. My way is, as long as you have a bias, you can be successful with this. But yes, I do have that feeling too, bottom frag. Just sometimes I take a trade and I'm like, sometimes I win those, sometimes I don't. It was luck that today I won those. But truth is you have your own personal, I guess, database in your mind, right? Of your backtest, of I know that when I trade those, long term I will be successful. So at that point, is it truly luck? Could you review the lunch raid early in the PM session? I think it was around 110 to 20. We'll look at it. We'll look at the PM session, especially on days where the morning does these kinds of random things. I like to look for a PM trade. Now, there was no lunch raid in accordance to my understanding. Now, when you say a lunch raid, you're looking at something. Do I bring this over? I'm thinking of something. No, not yet. You guys aren't ready for that. New stuff is coming. But let's just draw it manually for now. So noon. Well, let's actually just look. Is this high higher? Because I want to draw the lunch high and low. Okay, so this is lunch high, and of course lunch low. Right here. So once we rate this, lunch raid intraday framework tells you, okay, well now I can start framing shorts to this level. Now clearly this did not work out. We'll look at an opportunity. Personally, for me to have any sort of lunch raid, you're saying it was around 110, 120. I'm seeing 110, 120. There is no lunch raid here, clearly. So perhaps your understanding is different to the one that I share. The entry around 110, 130. I will never trade before 130. right? Sometimes I look at noon to 1 as the lunch rate, but that is specifically when we've reached a previous objective during lunch. And I mean, you say we have, right here, we reached this at 12:03. So that's actually during lunch. So from a mechanical standpoint, yes, you could look for it, but I still need us to have a raid. So it's not, lunch raid is not, oh, look, we have a rate of liquidity and we are during lunch. I need us to take out one of these extremes, which means that either at 1, so let's actually mark it out, or at 1:30, and again, depending on what I just said of is if my retracement objective has already been met, because that is the lunch's job. It's retracing, or, okay, I'm not going to go in depth about that, but in this case, we had a retracement, our retracement objective has been met, which means that I can also look starting at 1. But even at 1, did we take out that high or that low? No, that's the current low and the current high and low of the lunch session, and we didn't take those out. So I have no lunch rate framework up until 1:32. So now we'll look at it, and right here, all you'd be looking for is a breaker block. Now, yes, there is SMT here. So you actually had a breaker block form at this level. All right, let's actually mark it out as such, like this. Because there's SMT here, you treat NASDAQ as if it did take out that swing high. So this is a breaker block as soon as we trade below it here. Okay, not a lunch trade, but just a long setup. I don't trade during lunch. And I say this a lot. I say this quite a bit. You can trade successfully during lunch. For myself, I believe it is too inconsistent to be worth my time. This is something I talk quite a bit about. And I always tell you guys, when I trade the PM session, I'm looking for 2 things. It's either a lunch raid or it's a 2 PM power of 3. And today, I wouldn't have been looking for a lunch raid because I'm looking to long. So if we take out the high, that's just classic continuation expansion. So I'm not going to be looking for that. And I could look for a long at 2 PM, which we had some opportunities here. I'll showcase this, but none that were actually worthwhile in my opinion, just because it doesn't go far, right? We'll look at this. So if you were looking to short actually mechanically from this lunch rate, you'd be looking for this, and you'd see inversion fair value gap right here, which we traded back into. But honestly, this is in close proximity, right? So you would look to short here. So short here, you have fair value gap, inversion fair value gap, inversion fair value gap right here, which also gives you plenty of room to trade back into that order block. And as we can clearly tell, that is a very definitive stop loss. Now, if you were looking to short this, you would not have seen the long. And if you weren't in that short, well, you could have seen that at 2, we opened higher. If I'm looking to long, I don't want to see us open high. I want to see a manipulation lower. Nonetheless, if I'm looking to long here, I need an entry. Now we had a bullish fair value gap, but we had nowhere to enter. Then you have that structure form, and I'm going to mark this out to help you guys see it, right? So you have a range form, then you have your manipulation, and then you have your distribution. This, of course, creates a breaker. We had multiple breakers below. First and most in-your-face example is swing low, swing high, took out the low, took out the high. From that moment, I have a breaker block, and I can look to long. I am below 2 PM open, right, which is that level right here, which is even better than, well, even better to look at. And I just noticed I want this at 15.15. There we go. Because I never trade the last hour, so I like just having my levels end there. By the way, cut off in the key times indicator, which is getting an update right now, by the way. But just to look back at this very quickly, right, you have your breaker block, and you know what, fuck the blue boxes, let's bring back nice, well, that's pretty much blue also, so I'm sorry. But from this point on, you formed your breaker block here, and so you'd be looking to long. What kind of a raise do we have? Well, we inverse the fair value gap right here. There you go. That's your entry signal. You don't need more. You have your breaker block, you have your inversion fair value gap. Now we did trade into that one for a while, right? But that's what generally the PM session does. We'll consolidate for a while until a very large expansion comes. Now from this, I see inversion fair value gap, fair value gap order blocks, you would have actually had a pretty nice stop loss at 9 handles, giving you plenty of opportunity and actually very much nicer trade than I thought. I personally wasn't looking to trade the PM session because, as I told you guys, right, I just had a break even, had a 1 loss, 1 win, 1 small win, and 1 loss. So for me, that's just call it a day on a day that isn't too high probability. But looking at this very beautiful setup, and as you can see just from looking at this range, which is what you'd be framing to start off, right? You see first premium and efficiency along with that 2 to 2.5, right? So you have equal highs with the reversal range. That is a beautiful opportunity to take profit. A little low at 1.42, but just placing it up to that reversal range, you got 1.6, 1.5, 1.6, right? So definitely look to take profit there. And honestly, look to take profit there. Look at how that candle expanded quickly. So clearly had opportunity for more, but we'll be pessimistic because that's how we have to be, right? When you're testing, when you're back testing, when you're reviewing, what is the worst possible outcome? This one, if I follow my rules, enter here, stop loss there, take profit 1 there, take profit 2 at this level. Let's actually mark it out as such and give you guys a little. I would look to partial because of that high, sweep into the 2 standard deviation. Makes a lot of sense. And then 3.25R all the way to the end. And as I said, right, a lot of consolidation is first, but as soon as we expanded higher, clearly went very quickly to that final objective. So very beautiful long opportunity. And then of course we can talk about, oh look, there's a breaker block here. Okay, but there's no way I can justify a short here. So I'm not going to talk to you guys about look at what the beautiful entry model showcased. No, because I can't explain it. This I can explain. I told you guys all the way down from a daily chart. This is high probability of being low of day. What did we do in the morning? We expanded towards our objective, previous day high, right? You know what? Let's bring this guy. We expanded towards our objective. Then we retraced. And then we had a continuation. Can I frame this last little retracement area right here? Can I frame this as something? No. Okay, I definitely hate this tool. I'm never using that again. But I can't frame any shorts here. I could frame longs here. I could frame shorts here, which I failed to recognize this morning. Just want to be completely transparent with you guys. I'm not trading during lunch. As soon as lunch ends, right here, I can look to frame continuation longs. That's it. That's all I could frame for the day. So no, I'm not going to discuss what kind of opportunities you could have had here. And also, if we look right here, you did have SMT on the highs at this level. So even that long is being pushy. On days where you guys have seen it, right? I see a lot of regulars in here. You know, there are plenty of days where price moves according to the trend, moves clearly. If you're manually trading, focus on those days. That's the days where you want to be there. That's the days where it's legit showing you where it's going before it's going, and it is super easy for you to see price. That's where you should engage with the markets. When it's not, I go into defense mode. My job is no longer to make money. My job is to survive. And sometimes the easiest way to do that is to get away from the markets. So I had a rough early morning session. Why would I want to look at the PM session? I'm already not in the best state of mind. So there is a very low probability of me having a successful trade there. Even if my setup works well, I'll probably manage it wrong. That's just a little insight into how I think. And now perhaps you see this and you're like, oh, you could have made so much more money. Okay, I could make so much more money by risking more every single trade. There are different ways to look at it. My focus is consistency, and that's how I achieve it. Do you guys have any other questions about that day? Right? Just overall, a lot of back and forth, right? But once you break it down and explain it, the truth is the move just started pre-market, right? If you got in right here, you're just like beautiful long and then beautiful retracement, then a small continuation that wasn't worth it. But I don't trade pre-market, and more specifically, I wait after news. Not seeing any questions. Guessing it's all clear. Is that what we're thinking? had another long PA review. I don't do it on purpose. We just spent another 40 minutes, right? Pleasure. I'm very glad to see you all in here listening to me rant and talk for 40 minutes is pretty crazy. I appreciate that. Love the longer PA reviews. Awesome. Awesome. You know what? Usually, when we do these longs, we're talking about a bunch of different things, but I think these are very valuable. And now, of course, that's like uh, egotistical, right? But I really do think that there is no better way for you guys to learn my model specifically, right? So there are a bunch of different ways to trade. You don't need to trade my model specifically. But if you're interested in trading my model, there's no better way to learn than these PA reviews. I'm literally showing you exactly what, where, why, and how to trade these moves and explaining it to you accompanied by my thought process. So I don't know, that I do believe that is the best way to go about it. But on that note, for these longer PA reviews, I am tired, guys. So we're going to call it a night. I'm going to wish you all good luck trading tomorrow. As I said, CPI, favorite week for sure. And it's going to be a big one. It's the year over year CPI. So we're going to see what yearly inflation was. It's going to be packed. Markets are going to move. So definitely don't trade during the news, please. Unless you want to gamble, pretty much, right? Because margin requirements are going to go crazy. You're going to get slipped like crazy. So definitely be careful there. But good luck. Good luck trading tomorrow. Have a great night, guys. And we'll see each other tomorrow night for another PA review. Bye, guys.